Hi, this is a piece called Rising Gas Prices and Your Future. Um, some of the information in it will be new, but most of it will be information you're familiar with. But the big twist on this is in order for you to learn and adapt to what's here, um, you might face some challenges. So I think the presentation, the content of it is real simple, but I want to note that in adjusting to new information, people have a variety of responses. Um, and given that we've seen fuel prices rising for quite a while, you can see some of the responses people have. They have, uh, first of all, some people are surprised, while others, such as myself, who specifically predicted rises in certain kinds of fuel prices, um, aren't surprised. Amongst the people who are surprised, some of them are then angry, disappointed, blaming, uh, could be uh, hopeful for a solution. Maybe a certain political candidate or a certain political program will uh, alter their future for them on their behalf without them personally adapting. And so that's really what this is about, is personal adapting. I'm going to give some really basic and elementary school level economic information. And the challenge for you is to maturely uh, process this information and reflect introspectively on how you have been dealing with it, and what your choice is in terms of adapting, or I'll put it this way, in terms of adapting sooner or adapting later, because you will adapt either way. And all of this stuff like complaining and criticizing and wallowing in confusion or depression, or kind of withdrawing into hope, which is really not much different from wallowing in depression and anxiety, is just flippantly dismissing the whole issue with some hope. I'm going to donate some money to a cause, or vote for a candidate, or send out some videos, and people will then elect a candidate, and I won't have to do anything further. If that's your hope, this video isn't going to satisfy those hopes or fulfill those hopes at all. It's going to dash them, or uh, dissolve those illusions, wake you up from those dreams. And I was going to go over a little list, because a lot of what I've just been referring to has become referenced in psychology, in academic psychology, as the stages of denial. I'm saying they're actually also the stages of adjustment or adaptation. The latter part of the process, besides I didn't mention grief, is a key one, or sadness. Acceptance or acknowledgement of the reality, and then integration of that reality, and intelligent adaptation, conscious and such as strategic, as well as unconscious adaptation. So that's the background in terms of the psychology, and that's the challenge, that you be present to how your responses have been, and whether or not you are willing to adapt quickly to what you already know, as well as some new information I'm about to give you. So, why are gas prices rising? People have been asking this for a while, as well as what will the future of gas prices be. But let's stick with why they have been rising, or why they ever rise. I'm going to give you, again, some elementary school economics. We have supply and demand. People are familiar with this concept that prices shift in response to shifts in price, supply and demand, such as of gasoline or of crude oil or of firewood or of oranges or avocados or laptop computers, candy. The day after Halloween, the day after Christmas, a lot of things are very, very inexpensive relative to right before certain times of peak demand. So we all are familiar with the basics, and we all, as I said, we know that when demand is rising faster than supply, the prices go up. So high demand, low supply is shortage, which means high prices. High supply and low demand means low prices, or a glut is another term for that. So those are represented in some figures that are attached for those of you seeing the email. And then as it relates to gasoline in particular in the U.S., we see supply and demand, and then I put in the 1950s, the 1970s, the 1990s, and 2010 in green, those periods of time, and then some of the prices. Gasoline in the 1950s, you may recall some of the previous prices of gasoline over the years and decades. In the 1950s, it was about 25 cents up to 29 or 30 cents actually per gallon. In the 1970s, 50 cents. 1990s, $1.50. Actually, most of the 90s was around 125. It fluctuated some. In 2010, you spend $2.50, $3. Depends on where you are in the U.S. and exactly what kind of gasoline you're getting and what part of the year. But let's say around $3. So you can see generally, as time goes on, the overall supply of gasoline in the world and in the U.S. is declining. So that's reflected as over time the supply is going down and simultaneously demand's going up. So as there's more and more demand, there's more and more roads, there's more and more cars, there's more and more airplanes, more and more airports, more and more passengers traveling. Demand, generally speaking, over a long period of time, we would say demand's going up dramatically. Supplies are going down significantly as we just consume, 15 million barrels per day in the U.S. or 60 or 80 million barrels per day worldwide. Well, that adds up eventually, a couple decades, and we're talking about, quite a bit of oil, quite a bit of gasoline. And then I also put, as supplies continue to go down and demand continues to go up, we can expect prices to go even higher. $7 a gallon, $7.50, $8, $15 a gallon, $20 a gallon, and so on. And this starts to bring up what your future would be if the prices of gasoline doubled or quadrupled from where they are now, or doubled every year for the next 10 years, which is a huge increase over the course of that period. So what would the implications be for your personal finances, for your business, for the businesses that you do business with, the households and family members and friends and acquaintances with whom you interact? What would be the consequences for their finances? And given that the U.S. is basically, when I say the U.S., I mean an accumulation of all of the households and businesses in the U.S., if the challenges to your finances would be with no other adjustment, if your finances would be challenged by dramatically rising fuel prices, not just have been, but continuing rising and continuing challenges and much bigger challenges, well, you'd probably see a lot of households and businesses go bankrupt. And we've seen that so far. But what if that continued? What if that accelerated? And you start to get now back to the psychology part of it. This is an especially popular consideration. Many people would be terrified of the prospects of what I'm saying. I know this because I've been saying it for a long time. 2003, 2004, 2005. I've been talking about many of the things that have surprised a lot of people. I've been noticing them early, dealing with the learning process, by which I mean emotions, dealing with that, and then making some adaptations. So we're facing a potential shift where USSR and Japan have already faced some destabilizing of their economies, and then we see Ireland and Greece and Spain and Portugal and certain parts of the U.S. more than others, Las Vegas and Phoenix, having destabilization of certain parts of their local economy. So as economies destabilize, whether it's USSR or Japan or EU, European Union, or UK, United Kingdom, or US, United States, as there is destabilizing going on, many people are surprised, but some people are not surprised. They notice these things developing first. They deal with whatever there is to deal with. They make adjustments, and they may prosper tremendously because there's a huge transfer of wealth underway, a huge transfer of affluence and influence underway. Now I'm making a bunch of asides. Let's go back to this idea of the supply and demand curve for gasoline prices per gallon in the year 2000, but in different places. I mentioned Japan, the USSR in the late 80s and early 90s. Those were two parts of the world, two governments that faced some destabilizing. Many people aren't that familiar with the destabilizing Japan, but you could do research on it. As we look at prices of gasoline per gallon in the year 2000 across different parts of the world, we see a pattern similar to the pattern in time in the U.S. Places that have a whole lot of supply but not a lot of demand. They don't have a lot of cars, they don't have a lot of roads, they don't have a lot of airplanes or airports. Places like Turkmenistan, a gallon of gas in the year 2000 might have been 10 cents in Turkmenistan, which is north of Iran. In Iran, it might be 25 cents, a little bit more in Iraq, quite a bit more in Saudi Arabia. Again, we're getting to places where they have a lot more demand. There's a lot more cars, a lot more trucks, a lot more roads, a lot more airplanes and airports. So the supplies relatively are lower relative to demand. The supplies are lower in Saudi Arabia than Iran. And then you get to a place like the U.S. It used to be like Iran a long time ago. It used to be like Saudi Arabia not too, 10 years ago. Now the U.S. has a lot less supply, still a lot more demand, and prices are like, $2.50. Actually, I don't think prices were quite that high in 2000. So this chart is for illustrative purposes only. Maybe it was $1.60 or $2 in the U.S. in 2000. In the UK and in the EU, as of the year 2000, prices in U.S. dollar terms might have been $5 per gallon. So again, in those places, they didn't have the kind of production that the U.S. or USSR or Saudi Arabia had. UK and most of the EU really were not. Well, the UK had a little period of time, but a lot of those geographic ranges didn't produce a lot of oil ever. So they never had a lot of supply. They have a lot of demand relative to their supply, so prices are pretty high. So there's actually a twist in the information I've just given you, and because of the time, I'm going to just challenge you. What's wrong with the chart I gave you that shows what's missing from the chart I gave you of U.S. data over time? U.S. gasoline prices over time. Something's missing. Those charts aren't wrong, but they're slightly misrepresent things, and it's important. I'm just going to give you one thing. There's two things. It tracks global supply, not available supply of refined gasoline, like already out of the ground and available and distributed and at the pump where you are. So it's a certain reference to supply. And the other thing is those prices weren't adjusted for inflation. If you look at prices adjusted for inflation in the U.S., you find that 1998 and 99 were actually the least expensive gasoline prices ever. I don't know, maybe I'll just leave it at that. If you're interested in more in the future, how to adapt, what's coming, contact me. All right, thanks.